Hi everyone and welcome to Talk to the Expert at propertygenie.co.nz. Today we have with us Lisa Dodson, co-owner of iFind Property, buyers agents, property finders. Hi Lisa and welcome to the Talk to the Expert interview today. We would like to speak with you about property versus other investment options, whether it's shares, whether it's precious metals or listed property trusts as well. Please, give us your take on that.
It's an interesting one because I'm probably an unusual person in the fact that I'm actually a trained financial planner and had quite a large financial planning firm for a number of years, but at the same time I'm quite a passionate property investor and I've been doing that myself for a number of years, so I kind of understand both areas quite well. The thing that I love about property investment specifically is the leverage factor. And so that means that for a lot of people that have got some equity in their home, they can go and buy, let's say, a $300,000 property investment and use the equity in that home to get into that property investment. Okay, so now they actually own an asset of $300,000 that the tenant will pay off over a period of time. Now, you get, let's say we've got a 5% capital growth on all of our investments. When you go into a property investment, because of that leverage, you get the 5% growth on the $300,000, even though you have a big mortgage on it. Whereas if you were going to go into the share market as a comparison, then you might only put $5,000 in, so you're only getting that 5% growth on that $5,000. And because in New Zealand, it's very easy to borrow to buy property investment, but it's not very easy to borrow to buy shares. In Australia, for instance, it's much easier to leverage against your house to buy shares, and it's quite common to do that. But in New Zealand, it's much easier to leverage what you have through property investment. So that's probably a really key reason why property can do so well for you. The leverage makes it is a great component to be able to use that you don't get on other investments. The only downside for property, though, is it's not very liquid. Whereas other investments like the share market or let's say property trusts, and what they are is an organisation owns a number of large commercial buildings and you own a percentage of the shares in that company that owns all those properties. So you get some capital growth and you get some income from those. And for people who are passive investors and probably maybe a little bit more conservative, they're quite a good option. The great thing about property trusts, like with the share market, is they're liquid. And where I've seen, like, if we look at when the GFC happened, a lot of property investors got into trouble because they couldn't afford to pay their mortgages and they didn't have any liquidity. Because it's interesting that when the market goes down, that's usually the time that we may need to sell, but it's also the time where there's not a lot of liquidity in the market, and that's what catches a lot of property investors out. So I guess to sum all of that up, one of the things that I really like to have is a combination of some property investments, which is probably where I put quite a significant amount of my investing, but I also have shares, and I've had property trusts in the past and a range of other investments because I've got some liquidity and I've got some diversification. So I'm a bit of a fan of having that diversification, but also being able to really leverage property investment, which I can't do as easily in other investments.
Absolutely, that's a key point, the leverage. And also I would like to mention the precious metals don't give you any income, although some capital growth. So if you don't have the spare ability not to enjoy income, so it's not for you. And the thing I like personally about the property investment is having the ability to actually control the value in a way that you can add value to it. Yes. And you cannot influence values of a company, or whether it's an Australian-based company or any company who owns a portfolio of 20 shopping malls around New Zealand. There's just nothing you can do about it.
No, that's right. And I think with that control, though, also comes a requirement to actually be quite involved.
Yes.
Whereas those other investments we talked about, like the share market or the property investment trust or fixed interest or term deposits, etc. It's a very passive, hands-off. But if you're prepared to put the time in and to learn and develop the skills, there's a huge amount that you can do with property investment.
Excellent. Thank you very much for that, Lisa. That was great informative video.